Test, test. Can you guys hear me? All right, good. Let's go ahead and get started. This next series, I'm going to try to put out videos once a week, every Sunday at least. Um, this is going to be part of basically a series where I just go over one concept that you can use, and in addition to multiple others, just to reinforce some positive habits in your trading. This next one, super simple, but I want to go over it. This is actually going to help me reinforce my trading, as well as hopefully kind of reinforce yours as well. Basic concept, but it's something that's important and often forgotten about, especially if you've already lost or you're over leveraged and you're not thinking about your trade. So basically, if you guys look at the chart, you notice these two lines. So this is basically going to be your primary draw on liquidity. So you're basically one of your higher highs and lower lows. So our session opened around here. That's why I didn't use this as a primary. So basically, from session open, I'm going to go back. I'm going to look for the next highest high. That's going to be my primary draw on liquidity. And then obviously go back from here. And this is my next low. So this is the downside draw on liquidity. So super simple concept. So these will be labeled as primary. So these would be something that price may or may not gravitate towards, but you always want to have it on your chart so that you're aware of where price may be reaching. So now that we have those out of the way, we'll get into the actual meat of the concept. So now we're going to drop down to lower time frame, and this is the really important part that is going to kind of reinforce my learning, as well as hopefully kind of show some of the newer guys what you should be looking for. So basically, this was Friday last week. So if you look over here, we're going to be focusing on this price action. So we have the primaries out of the way. Now we want to label our secondary. So what we're going to do is we're going to drop down into an even lower time frame. So we've already taken out the primary here. With this drop down, so what we would label as our next, or our secondary, would be over here. So we've just pretend that we've just taken this out. We're just kind of waiting. So this would be our secondary. We've already taken out the primary. Now we have the secondary. Go ahead and add text there. Oops, sorry. All right, so we have that labeled. So the important part here is now, if you are looking for a trade, you want to obviously you're looking to go long because you're down here. So our primary has already been taken out. So we've now passed this point, and we've put in a low here. That's why this is labeled as our secondary. So for a trade idea, when you're trying to look for something, what you want to do is you want to wait for that secondary to be taken out, and then in addition to that, you want to have a lower low after the secondary is taken out. Now, does it always mean that you're gonna be able to catch a trade? No. Sometimes price will just reverse like it did right here after it went off the primary, but 90% of the time it's going to take out the secondary, and it's going to reverse a little bit, but then if we have a big reversal coming up, they're going to take out the low again. So you have a low, you have the primary low taken out, which was this black line, slight reversal, and then you have the secondary low, which was this one that was taken out, come here. Some people may be trying to get long here on that. They saw it pop below here. But you want to wait for that second low. And this is applicable to just placing a trade in general. You don't even have to worry about, let's just say you're scalping. You don't have to worry about primary, secondary, nothing like that. Depending on the time of day, if it's a good time for a trade, whether it's AM or PM session, if you're looking to get long, you always want to wait for that initial reaction and then another low before you take your trade. For me, it's just more of a safer bet. Am I going to miss a small percentage of reversals? Absolutely. But if you think about it, how are they going to screw the most people over? They're going to take out that primary first, which was here, and then they take out the secondary, which was here, and then after they take out the secondary, they're going to pop under that low that took out the secondary, and then they're going to reverse it up. So just something to think about. Quick video. These should be short and sweet. I don't plan on doing them longer than 10 minutes. But yeah, that's the gist of it. Basically being patient enough to wait for your low to be taken on the primary. Label that low. Wait for the secondary to be taken. And then finally, depending on the time of day, if it's within the window that provides trades, and I'll go over that in another video, which this is 1410. That's actually perfect. This is your reversal. So you could wait for that low to be put in, and then you could get long somewhere in here. Pretty simple stuff, but I forget about it too sometimes, so I'm trying to do these to reinforce my learning as well. It's mostly for me, so that I can kind of go back and review these videos. I think teaching is a great tool to further educate and reinforce your rules, basically. So let me know if you have any questions. That's all I got. Thanks. Bye.